435 Personal Finance class. And I'm going to do something that probably your other instructors haven't done, but I'm hoping it's a way that we can connect a little bit better other than through emails and um, the discussion boards and things like that. What I would like to do is take 7 or 8 minutes of your week just to give you a quick overview of the 2 chapters that you are going to be studying for the upcoming week. What I would like to do is just to give you my personal opinion of the things that are really important in these chapters. Um, from personal experience, I've been there, done all of these things. So I do have a little bit of wisdom that I can impart to you on that. You will not be tested on it. You will not find any discussion boards on it. It is just basically voluntary that you listen to this video. I hope you will listen to it just to take a few minutes and listen to the things I have, again, hopefully to help you have a better understanding of the chapter. I know the publisher has the videos online, but I'd like to use this time just to be able to connect a little with you. Chapter 4 basically is talking about tax strategy, and first thing I would like to mention in this area is please do not try to get out of paying your federal income taxes, because you will eventually get caught, and then your taxes and penalties will be so high that you'll never be able to get out of debt, and you'll be always have a lien against something, your house, your cars. The only thing they can't take is your kids. So personally, make sure that you go ahead and pay your taxes. The first thing that you'll want to do is to know how many deductions you have. You cannot count dogs and cats, birds, anything like that. It can only be yourself, your spouse, and children you have. If you are providing more than 50% of support for family members that you can prove, then you can actually claim them. But if they're claiming themselves, you cannot claim them. So that's a tricky area, and be careful and not try to get deductions that you really are not entitled to. The second thing is, when you're looking at your deductions, know how you want to pay your taxes. What my husband and I do, tax auditors, tax preparers just cringe at, because what we do is we both claim, my husband claims head of household and no dependents, and I claim single and no dependents. That way they're taking out more federal taxes on us, which means at the end of the year we get a nice hefty sum back every year. We use that as our savings so that we can plan trips, we can make major purchases. People say, well, you're letting the government use your money without paying interest on it. That's just a way that we do to save money, because it's easier if they take it out of my check and I don't ever see it, but then I get it back at the end of the year. But again, that is my personal way of doing it. Don't say, well, Miss Moss said we should do this. Do it how that you want to do it. You can also always be audited. We have been audited one time, and it was the most scary thing I'd ever done. I thought, I'm going to go to jail because they think I've defrauded the government. Everything checked out because we kept very accurate records. Make sure you keep your receipts. If you're claiming deductions, you have those receipts somewhere. If you keep them electronically, if you keep them in a shoebox, just make sure you can prove any deductions that you have claimed on your tax. Also, you'll want to know what form you're going to use. Are you going to use the 1040 Easy or 1040A? It goes by both names. Or if you're going to itemize, then you'll do a 1040 long form. Both of these are great forms. It's just depending on whether or not you have the amount needed to do deductions on that. So basically, that's chapter 4. Now, chapter 5 is talking about financial services, savings plan, and payment accounts. Let me encourage you to start, if you are not using a saving plan of some type, whether it be a saving account, a CD, a money market account, any of those, whatever you choose, start now. It can be as little as $10 a week that you're putting into a savings account. But what you want to do is you want to get in the habit of putting in money in a savings account, an emergency fund, so that when something necessary comes up, you have that money. Don't make it so easy that you can just go in the closet. Maybe you have a box that you're putting $10 a week in, and then your friend wants you to go out to lunch and say, oh, well, I'll just go get $10 out of my box. That you do not want to do that. That is not a way to start a savings because it's too easy to get to. Therefore, that's why I say use some type of a financial institution so that you can't get your hands on it at the drop of a hat. Then the payment accounts that the book mentions, a couple of them, is that you have a debit card. I love debit cards. My husband hates them because there's so many entries in the online banking. But it just is a way that I don't have to carry so much cash around. Credit cards. Credit cards, you do need to have established one credit card to start your credit history. But what you want to do is you want to make sure you pay it off every month. I do have a credit card. I don't use it very often because I use my debit card. But when I do use it and the bill comes in, I pay it off that day. I pay it at 100% full. My last one came in just last week, and I just glanced at the interest rate that they're charging now for credit cards, and it was 26%. That is outrageous to pay 26% interest on unpaid balance. So don't get yourself in that credit card. I'm going to put it on my credit card and I'm going to pay it off. And then when it comes in, you don't have the money. If you cannot afford to pay it at the end of the month, don't buy it. Get it now. I tell my on-campus classes to take their credit cards, to actually put it in a Tupperware container, fill it with water, freeze it, and do not thaw it out in the microwave or under hot water. It has to sit there and entirely thaw out before you use it. That will cut down on your expenses because the urge to go out and spend is gone away by the time it thaws out. Those, and then you, of course, you have the store credit cards. That again goes back to the making sure if you use that store credit card, you pay it off in full every month. The last thing it talks about in this chapter is to know how to reconcile a bank statement. I know most of you probably do online banking, so you don't physically probably do a checking account, but even if you do online banking, you need to go in once a week, every other week, minimum once a month, and balance your checking account to make sure that you know you have X amount of dollars to pay your bills upon that month. So hopefully that you will take care of this, and this has helped just to give you again an overview of my thoughts on the chapter. And I will do this hopefully for each week, just a way of connecting with you. Let me know if you have any thoughts about this. If you say, don't do this, don't send this to me, I don't want to hear it, that's fine. Again, it is not mandatory. Have a great week, and let me know if you have any questions.